We're going to take a look now at question 3 of the September-December 20 exam. This is the question that was called Corbel. The first part was a bit of general discussion for 5 marks on the challenges in recognizing and measuring intangibles. Quite useful to think about these words, recognize and measure. Because this could be asked in the context of something else, like financial assets. So let's think what those words actually mean, first of all. So, as always, it's all about knowledge. When you've reviewed this question, of the 25 marks that are there, 23 are knowledge that you had in financial reporting. So there's almost nothing that's new in SBR. But initially, recognition. And if we think about the challenges, well, the first point, isn't it, is that you only recognize purchased intangibles. What's exciting about that is that if those intangibles are recognized with a group in group accounts, they're measured at fair value, and that's subjective. So if purchased with or as part of a group, a company, then fair value is subjective. How do you value a brand name like Coca-Cola? You could look at it from the other perspective and say, well, actually, we're not giving people much information, because if you don't recognize internal intangibles, and no, we're not allowed to, are we really actually showing the value of the business? So therefore, that might be unhelpful to investors. So only recognizing purchased intangibles again, well, we could say it does not really reflect the value of the business. And when you get some massive startup, as Facebook was donkeys years ago, it's not something that they recognized or would have recognized at that time in their own accounts. In terms of measurement, measurement is about 2 things, isn't it? It's about the fact that, as you know, you normally amortize over the useful life. And of course, again, determining useful life is subjective. How long will people continue to buy Coca-Cola for? So, determining useful life is subjective. If you're bored with typing subjective, you could type judgmental. It means exactly the same, doesn't it? But determining that life is judgmental. The other point is about revaluation. It's very rare to actually revalue intangibles. You can do so if there's an active market, and that almost no time is there an active market. I think there is for things like taxi licenses and things like that, but otherwise no. So in terms of revaluations, it's not like buildings where there's an active market for buildings. And if you've got a block of flats, there's bound to be a similar one in town you could use as a benchmark. But a lot of the time with intangibles like brand names, there's no active bench market. to serve as a benchmark. Now, I'd have thought with all of that, we could put some sort of discussion together. As always, remember you can use words like faithful representation and relevance. So any of those characteristics of financial information could go into that question as well. That was a very nice little discussion. But notice going forward, recognition, measurement. Think about it in the context of other things in the balance sheet, like PPE, investment properties, financial assets. Say, do I know the rule on recognition? Do I know the rule on measurement? So we'll move ahead to part B. Again, as always, pause the recording if you've not had a proper look. Hopefully you've noticed that the requirements follow the scenario. So the first requirement of B will relate to the first part of the scenario, the second requirement to the second part of the scenario, and you'll notice that the examining team put in some very helpful subheadings so you don't get into a mess. The next issue, but B1, which was worth 4 marks, was actually 2 2-mark questions, wasn't it? It was all about Jengi. The first question about Jengi was to say that should you separate it from goodwill? And again, if you go into this exam and you haven't defined intangible at the end of it, you've gone to the wrong exam, because it's always in there somewhere. Remember, define intangible asset first, and that is, of course, an identifiable asset. An identifiable asset is identifiable either because it is separable, can be separately sold, or because it gives legal or contractual rights. There's your knowledge. Knowledge first. Now apply it. When we look at this particular brand, again, it does say that they will have legal rights once the registration has been transferred. It's clearly a separate intangible. So again, it's clearly, effectively again, identifiable. So the brand gives legal rights after registration, after they've done the formalities. So therefore it is clearly a separate intangible. Couple of very easy marks, but people always drop the knowledge. And that's what you mustn't do in this exam. Get your basic knowledge down first, and then try and apply it. If you have the right knowledge and you apply it a bit wrongly, it's not serious. The other part of this 4-mark question was to say, is it a separate cash generating unit? Again, the question is immediately then to say, well, what is it that you need? You need the knowledge, don't you? So what knowledge do you need? You know what I'm going to say. Cash generating unit. Cash generating unit, remember, is something that would generate an independent stream of income. If you can imagine, 4 marks, you'll have got the first 2 here, you'll get the third one there. So if you're not sure about the application, it's not the end of the world, is it? You'd still leave the exam with 3 out of 4, which is 75%, which is a nice score. So what's the issue here? Well, this is where it gets harder. When you look back at the scenario, they're shutting down the factory. So actually, the cash generating unit is probably not the brand on its own. It's also the related manufacturing capacity. So it's not just the brand, because you can't, it's no good just having the brand name unless you can actually churn out the perfume. So the CGU is probably the factory plus the brand. So what they will have to do when they actually sort out their cash generating units is decide how much of the existing factory relates to the new brand and how much to the other brands. They'll make reference to something which is known as a two-stage impairment test. It's very messy in practice, but they're not asking us to do the calculations, where they'll kind of look at the assets on their own, and then they'll look at the jointly shared assets like the factory. It's a very messy, but the answer will make a reference to it. Two-stage impairment test. You can read that later if you want, but that's dealt with the Jengi, 4 marks. The next 6 marks are about Locust and Clara. So this is again about intangibles and their life. So notice please, it is not an infinite life, it's an indefinite life. 3 points. First of all, what do we do if you have an indefinite life? That's your basic knowledge, isn't it? If you have an indefinite life, as you know, there is no amortization. But what must you do at the end of every year? You must test for impairment. So test for impairment at each SOFP date. Then it asks us to apply that in the context of 2 brands called Locust. Would you buy that for your partner? I'll buy you a bottle of Locust. It sounds a bit odd anyway, but if I get these the right way round, Locust, if I remember, is one that has an established market. I guess it's like Chanel or something like that. So Chanel perfume. I remember my mum was very fond of Chanel perfume, and my granddaughter is very fond of Chanel perfume. So it's just knocking around permanently, isn't it? So that it's very likely that that would have an indefinite life. And the other one is called, is it Clara? Now I must behave in this because we can all think of an example of this. This is something that relates to someone who's currently a famous actor. So this is the one where you've got have an actor. And of course it may well be some actors' brand names stick around forever, like Humphrey Bogart and the rest. Some, of course, disappear and fade away, but I won't give any names. I'm sure you can think of some. So again, what you're saying is, well, it may be, again, that it has a more limited life. So the life may be linked to the, let's say, the working life of the actor. And therefore, the chance is, isn't it, that actually it's not going to be indefinite. So again, we're probably saying, again, the life is probably not indefinite. In which case, of course, you'd have to estimate how long Clara will be a famous film star. Difficult, isn't it? And then use that to sort out your amortization. There we are. There's the requirement about locus Clara and indefinite life. Next point for 6 marks was about the closure. 2 parts to it, wasn't it? First of all, the closure of 6 stores. And then later, the proposed closure of some other stores. But let's think about the 6 stores first. So if we're talking about a closure, hopefully you've made the mental link to IFRS 5, which is always tested, discontinuance and assets held for sale. In the profit and loss, it may be treated as a discontinuance. In the soft P again, it may be treated again as held for sale if they are held for sale. So this was the situation, wasn't it, with the Italian stores. Yep, they're looking for a single buyer for the assets. So we're definitely in the world of discontinuances. So again, use your knowledge and apply it. First of all, a discontinuance, of course, is something that is a major area of business or geographical operation. So let me pick that up. Major area of geographical operation. In this case, that's the case probably because they're pulling out of Italy. And secondly, it's either already been discontinued, that's not the case here, or it's held for sale. Held for sale, reading the scenario, it sounds as if it might be held for sale because they do have a formal plan. They're actively seeking a buyer. And you could put down the other criteria. Again, you know that, so IFRS 5, what makes an asset held for sale? If that applies and it is a discontinuance, what therefore is the impact on the profit and loss and the soft P? In the profit and loss, remember this is financial reporting, not really SBR, is that the discontinued operations will be shown as a single line. So you show the continuing activities, revenue, cost of sales, distribution, admin, tax, multiple lines, and then a single line, the profit or loss from discontinued operations. In the balance sheet, you'll be showing, or in the soft P, you'll be showing the assets separately again. You'll be showing the assets separately down beneath current assets. And you'll remember that that's at the lower of their carrying amount. And then some people say fair value less cost of disposal, fair value less cost to sell, whatever you want. But the point is, they might be written down. And of course, there would therefore be no further depreciation. Other points that you could make, because it refers to the assets being sold as a single item to a single buyer, you could refer to them as a disposal group, which is what the standard says. So that would be a good phrase to put in, but almost towards a prize winner point, but nice to bring it in. So again, so you might say it's a disposal group. That's because it's going to a single buyer. And whenever you shut down part of the business as well, of course, there are things like redundancy. So you could talk about provisions. That would certainly get credit there. So the first part of part 3 was about the closure of 6 stores. And then the rest was about the proposed closure. Well, even if it is proposed, it's proposed in the press. Proposed closure of the other stores or some other stores. At the moment, this is probably at the fish market gossip stage, isn't it? Because it doesn't look as if there's a detailed plan or it's been communicated by the company. So therefore, we would not yet be starting to think about, again, any special accounting. So again, it doesn't look as if there's a formal plan. So it's not a discontinuance, and they wouldn't be making provisions for anything. But easy, that's nice and easy, isn't it? Nice, easy, straightforward stuff to talk about. What a lovely question. The final 4 marks, well, that's where they're really kind of stretching you, is asking you to think about the accounting with the primary store. Primary store, should it be tested for impairment? And again, whether the internet sales can be attributed to the store. It's very odd by this, and probably at this stage in this question you're feeling a bit battered. The message is, well, when do you have to do impairment? Let's put our knowledge down first. So the first message is that you impair the asset if there is an impairment indicator. It does say that they're not making profits. Again, the answer argues though, and I think the answer is right there, that actually they're doing what would happen in any store at the start. You don't expect to make profits at first in any business. You're bound to make losses early on. Any losses are in line with expectation. You could obviously debate that, but I guess the point is what they were hoping that you perhaps headed for was that because if it's performing in line with expectations, well, that's a judgment call, isn't it? So potentially, again, there's no impairment. If I was talking about auditing with you today, I would get all miserable and say, well, I think it might be an impairment indicator. So that's something to discuss. And then the other question, which I thought was really strange, was to say, well, should you combine the internet sales? Well, only if the internet sales are generated by that store, otherwise the internet sales must be a separate CGU. So I would be straining to say very much there, except to say the internet sales, again, would probably not part of the CGU unless in some way, I don't know, you wander around this store again and make an internet purchase there that relates to that specific store. So maybe this store, I think it said, was in Paris or some other city. So maybe if that specific thing is coming fresh from Paris, don't know. But again, I wouldn't be terribly excited. By now, again, I think we've pulled out a reasonable answer in terms of that question. Notice, sitting back, a good discussion of impairment, good discussion of intangibles, good discussion of discontinuances, and people are waving. I know you'll be waving at me and saying, well, I want to ask some questions on hedge accounting. Well, maybe we'll see one at some stage, but it's the basics that you need to know. And that was a review of question 3.